Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, February 7th, 5:51 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. Check the trend gauge over here in the upper right. Leaders acting bullish just fine there. All 5 of the major moving averages that we track in each of these videos also trending above their short-term 21-day exponential moving average and their medium-term 50-day moving average. All 5 also above the long-term 200-day moving average, and we're working on getting the slopes of the lines for the long-term moving averages flattened out and then turned up, and that will give us that much more confidence in this uptrend. The S&P 200-day moving average only dropped by a point between yesterday and today, so we're getting close to it being flat, and continued strength in the indexes will pull it higher. So what happened today? Boring morning, traded in a very tight range. Jay Powell had a Q&A today starting at 12:40 Eastern Time, and man, did the volatility kick in after that. Big spike to the upside, big reversal, even more than where we started to the downside, and then resolved higher with a nice close. Market, again, as usual, doing its best trying to separate stockholders from their shares. And today was definitely a challenge. No key levels broken today, though. We ended up net adding to exposure. Here are the final numbers. G6, this is our growth composite, up 1.3%. S&P, gap down 0.2, was up 1.1. Then it was down over 0.5%, ended up 1.3%. NASDAQ 100 up 2.1. Dow up 0.8. Mid caps up 0.7. Russell 2000 small caps up 0.8. Global diversified 60/40 stock and bond up 0.54% as the global bond index was down on the day, meaning yields ticking higher. In-house GROTECTION up 1.28% as we continue to add exposure as the market continues to prove itself. Anytime we get a move to the downside, bears look like they're trying to dig their claws into the market. The bulls come charging and gore the bears and support holding and resolving to the upside. So let's get right into it. First of all, we'll get into where we usually start, which is a daily chart of the S&P 500. And what do we do here at Revere? Our number one job is risk management. This is, we take care of the downside, capitalize or compound capital from a higher base, because our in-house rules avoid these bear markets. We break under a key level. It's a key trend line, the 200-day moving average. I'll talk about it in a second, although I'm pretty sure everybody that's used to listening knows about it. All of these occur under the 200-day moving average. If you protect yourself when you're under that critical black line, and then get back into the market when the market gets back above there, or even some more short-term moving averages and buy signals that we use. But that 200-day is the key line. As I said, you avoid these, you sleep better at night. You don't run into a negative sequence of returns that can destroy your nest egg. And if you're interested in this approach, reach out to me, email don@revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. So here's that chart of the S&P. Last January, we broke below it. So when we started getting extremely defensive, we popped above it a couple times, but really the downside kicked off on 421. This second leg down, a little bit of a rally. This third leg down, another rally. Didn't get the fourth leg down. We formed a base. Then we started working our way back above the short-term, medium-term, and long-term moving averages. And as I said, only dropping by a point a day now. The 50-day moving average has climbed above the 200-day moving average. The 21-day short term is above the 50-day. This is the setup that we want. The only thing missing is the turning higher of the 200-day moving average. But this is the setup that gives us confidence that the market is acting well and we can put money to work with more confidence for clients. That's not to say there aren't going to be some losses in there. There absolutely will be, but we cut our losses short and let winners run to the extent that they can. If they get too extended, we take them off the table. Always a combination of offensive selling and defensive selling. And here you can see, let's take a look at a 5-minute chart on the S&P 500. Uh, let's go to a 60-minute first of all, and you can see the key day, the Fed here, uh, February 1st, that afternoon. Uh, Jay Powell's remarks were seen as being very dovish or bullish for the market. We took off to the upside there. We went higher on Thursday. We pulled back on Friday, pulled back a little bit more on Monday of this week, and then today we challenged that. Notice this 4100 level, we've been talking about it. If you look at a daily chart, this 4100 level was key here when we couldn't get above it and stay above it in December, beginning of December. Also here in the middle of December, we tried here late January and failed, and then finally pushed above it with the FOMC meeting. So now that's called resistance. When you break above resistance, as long as you stay above there, you can have confidence in the market. Twice over the past few days, over the last 2 days, we've pulled back below that 4100 level, but resolved to the upside each time. We held it, one test of it on Monday. We tested it all morning today. We tested it again in the afternoon, and you can see how we resolved to the upside. And here is the roller coaster ride that Jay Powell and the market took us on today. You can see the big breakout higher, the big reversal lower, break below 4100. We were checking our stops, make sure that they were in place. Uh, we sold half of our biotech position, but we added some things here and we added some things in the afternoon and ended up having a pretty nice day. And this can give us that much more confidence that this latest attempt by the bears to try to break the market failed. And as long as that keeps failing, we'll keep adding to our profits as we continue to go higher. The entire time, the 21-day exponential moving average, along with the 50-day and hopefully the 200-day will join the party. They continue to act higher. If down the road we start breaking below them, we'll lighten up a little bit, lock in our profits, tighten up our stops, see if we have a minor correction. If it's just a minor correction, 3, 4, 5%, or if it turns into something more major. But either way, we're ready right now. 5.5% above the 200-day moving average. We got to 5.8% on Thursday before the pullback Friday and Monday. So taking another shot now at this 4,200 level is what the bears are or the bulls are looking at. So here's the NASDAQ 100, very similar day today, pulled back, held the ADMA. Oh yeah, I didn't mention we did undercut and reclaim the ADMA. I tracked this very closely for ultra short term bullishness. 4111 is where that is. We undercut. We touched it yesterday. We undercut it and reclaimed it today. Good stuff there versus the 8 exponential moving average, the ultra short term trend. So here you can see the pullback. Haven't even quite touched the 8 as the NASDAQ 100 has been the strongest of the indexes. Let's go to the Dow Jones, which has been consolidating very tightly. Lack of relative strength or relative weakness. Stronger on Friday, stronger on Monday, weaker today, but still holding above these 50 and 21-day, and the 8 is lost in this stack also, but holding the lows of this most recent consolidation, 33,600 to the downside, 34, 200 to the upside. You can see the stochastic is acting favorably, so relative strength's not there, but it's holding up. Mid caps, MDY, lagged yesterday, lagged today, undercut and reclaimed the ADMA. Very nice. That's what we want to see. Small caps, the same thing. Undercut and reclaimed the ADMA. Um, Not much more that the bulls could ask for than a true test today on the pullback, trying to shake them out, and a resolution to the upside. Let's take a look at the equal weighted indexes, RSP, up 0.93, lagging once again. The market cap weighted S&P 500 as Nasdaq 100 stocks continue to support the S&P 500 and the Nasdaq 100. Here's the equal weight Nasdaq 100 up 1.6% today, again lagging the market cap weighted QQQ, which was up 2.1%. So now let's look at some correlations. The dollar. Dollar had been strong 3 straight weeks. We had an outside day today, so clearly some volatility. Let's take a look at what happened on the 5-minute chart. So the initial reaction with the market to the upside was the dollar dropping. Then the dollar regained strength. That coincided with the market dropping. But then the market continued to move higher and not as much of a change to the dollar. So in other words, we saw that the S&P 500 made a higher high intraday relative to what Powell was doing. The dollar did not make a lower low, so it held up stronger, but it didn't stop the market from blasting to the upside. So uh, it did kind of hold down gold and silver stocks, but as they weren't as strong as the overall market. But the market ignoring the dollar to a certain extent. You can see the correlation, but not to the extreme to where this finished with a lower low relative to the initial volatility off of Powell. Now let's go to the VIX. The VIX, you can see very similar volatility up above the 21-day EMA and reversing and closing at the lows, the exact opposite of what you see with the markets, which is typical of what the VIX does. Now let's go to bonds. Uh, Check the bond index. Initially, they started off in sync with the market, which means prices up. This meant yields down. Then they reversed. Price down meant yields back up. But then they just went sideways into the close while the market was taken off to the upside. So let's flip this and take a look at the yield, the TNX. TNX sold off, so stocks higher, yield lower. Stocks reversed, yields continue higher. Then stocks reversed the pullback and went to the highs of the day, but yields kept going higher. So again, the market continued its way higher, even though yields were continuing to trickle higher after Powell had his Q&A. So a little bit of divergence there, and again, a nod to the bulls for pulling off the move to the upside while the dollar and bonds were not necessarily fully cooperating with what you'd want for total bullishness across the board. So TNX here, you can see rates making a higher high above the 50-day moving average. So second day change in character here with 2 closes above the 50. Looking back 4 weeks, we had 4 closes above the 50 before rolling over again. But the market seems to, the strong jobs report on Friday seems to have done its job, moving rates higher. So really, they did the job for Jay Powell. He did mention today, and the market reversed when he did that. Yeah, if employment keeps coming in strong, they might have to be higher for longer with rates, but by the end of the day, the market shook that off. So let's go back to the indexes. Let's look at corporate bonds, LQD. They pulled back, meaning rates higher. And JNK, these usually move more in sync with stocks and bonds, and you can see this ended up on the positive side. TLT, the 30-year, pulling back, meaning the 30 years making new highs. And if we look at TYX, that's what we can see also in this now has poked its head above the 50-day moving average, and the 21 curling up also. So rates wanting to go higher, believing the employment strength, and possibly that rates might have to be higher for slightly longer. Notice that bonds are making higher highs on yields, and stocks have not made higher highs relative to the Thursday after FOMC. So something to take note there. Although the reversal to the upside was certainly positive today, we haven't recaptured those recent highs up near 4,200. How about gold and silver? Dollar resolved to the downside. Gold just barely positive. And GDX, decent day, bouncing off this huge support level at 30 and the 50-day moving average, up 1.39%, now reaching overbought after this pullback. We still have our partial 2% position in GDX after getting stopped on half of it, but this 30 level doing its job, still lagging from a relative strength standpoint. And SLV also continues to lag, making a lower low. Bitcoin, is it risk on or risk off? Today, Bitcoin up slightly, still stuck in this tight consolidation that it's been having. Really, you can tell more by the 60-minute chart since this gap up that started on 120. So those are the major indexes that we track. Now let's go to the tail of the tape, and then we'll look at some charts of key stocks. So headwinds, these haven't changed. Stochastics neutral. Some of them hooked back up, some of them didn't. The small caps and mid caps are lagging. Uh, the three big cap indexes are more healthy from a stochastic standpoint, in overbought, but the negative divergence yesterday tried to hook back up today. NASI still acting fine. Dollar above the 21, rates above the 21 and the 50 now also. VIX down 4%. Fear and greed ticked up 4 to 79. This is an extreme fear. Operating under the bull case, bear case would be a break of the 21, meaning a failure of the rally. Uh, we pretty much detailed what the market did today with Powell, up, down, up. Day count from up 3 with 2 consolidations to a nice up day, giving us 4 out of 6. 13 days closing above the 80 EMA and the 21 EMA now. 22 days since the follow-through day on January 6th. Expectations remaining positive as long as we're above that FOMC level of 4101. Extremely volatile, but resolving higher. You can see the ranges there. The long 4-hour base today. Here's the intraday behavior. Very tight at the open, tight overnight. But again, as I said, resolving to the upside. Outperformance by oils, the two tech sectors, communications and tech, semiconductors, software, dollar up, then closed lower, bond prices down, retail down, defensive stocks down, staples, utilities, real estate, and solar lower, but solar up after hours on end phase earnings. We'll take a look at some charts here, what we hold, as well as some other charts to look at. Changes in-house, we bought ON. Uh, when we go through we'll take a look at the chart. We added to our small cap index TNA. We also added to current holdings TMDX and Shopify, and we trimmed biotech as it was trailing the S&P since we bought it, taking money out of weaker things, putting it in stronger things. Net, increasing exposure from 1.14 to 1.24. Bottom line, Powell speaks, the extreme afternoon volatility resolves higher. This was really one of the most intraday volatile days I've seen in a while. As far as the up down, 1.1% initially, then reversing down 1.8%, then back to the upside by 2%. Tough day, but we're happy with the result. So let's take a look at individual charts now. From the leaders list, first of all, the portfolio. Start off with biotech. And uh, nothing wrong with this at all. Bounced off the 21, but you can see a little bit of relative weakness over the last couple of days. And this high that it made did not confirm on the relative strength line. So really, it's just been we want to get 2 times what the S&P, and if we're not getting it, we're not going to stubbornly hold on to something. So uh, cut half of it. Chart looking good. Maybe it'll get its second wind. GDX still down on this piece of position, but the risk reward with it holding 30 is in our favor. OIH had a nice bounce back today, back above the 21 day. Now individual positions. Boeing seems to have caught fire again after 2 days under the 21-day moving average. Nice up day with volume after a lower volume pullback here. So Boeing looking good. Still holding that. Shopify, we added 1% to this today, taking it from 2% to 1% on the undercut and reclaim of the 8 EMA. Tesla, still a small position in this as it consolidates nicely now for 4 straight days, waiting for the moving average to catch up to it. Bros, 2% size on this. Nice reaction today, undercut and reclaim of the ADMA, AEHR. Still a small position in this. This is acting fine. DT, 3% position. They reported they're having an offering after hours, so this is going to gap down right now, looking like about 4% tomorrow. So we'll take a little bit of a hit on that. TMDX, doubled up our size on this today of this pullback to the ADMA. So it went from just a small half size position to a 1% position. This is a very thin stock, so we can't get too deep into it. And ON. So let's take a look at the action on ON over the last 2 days. Reported earnings initially gapped down, then took off to the upside, made 2 higher highs, and then sold off along with the market back to this 80 level today, leaving a wick to the upside. So uh, bounced at the ADMA. This is as low risk, and it opened inside this wick, the wick being the difference between the high of the day and the close of the prior day. With it being day two, this is about as low risk an entry as you'll get. The intraday volatility out of the way from earnings day back to the 10 minute. You can see moved up here and then a nice gentle pullback. We added early and then added again, bought 1.5 and then another half as it bounced off 82 here. The typical volatility with Powell, but very strong close, one of the strongest stocks in the market in the silicon carbide space, near all-time highs. Positive reaction to earnings, even though their earnings report didn't knock anybody's socks off, but their outlook was slightly weak, but the reaction and the fact that it's only got a PE of 15, giving giving and note the relative strength. So giving holders and new holders the confidence to get into it. This is also just a stage two. These stages have been so stacked. And after the bear market, this is what you want. Leaderships, let's look at a weekly chart of it. Anything making an all-time high after the bear market last year certainly deserves a look. And ON just behaved perfectly today. So this is our latest position. Let's take a look at a couple more before we wrap up. Baidu gapping up, close at the top of the range, heavy volume as they announced they're coming out with an AI chat product. Some more earnings. SWKS gapped up, solid earnings report with volume. How about on the negative side now? Axon. This is just out of the blue. Let's go to a 1-minute chart on this. Well, let's go to a 5-minute chart. Out of the blue, a big block of shares hit on the open, and it scared the hell out of weak shareholders. And this thing dropped double digits in 20 minutes, 25 minutes. If you look at it on a daily chart, this is a fund manager's, a portfolio manager's worst nightmare. When you've got a stock that's a leader, acting great, gaps down for no apparent reason, starts selling off on massive volume, undercuts the 8, undercuts the 21, undercuts the 50. I'm just glad I wasn't involved with this. But by the end of the day, it righted itself and actually closed right on the 21-day moving average. Really tough day for Axon shareholders. I know some that got shaken out. Um, See if this got rid of all the weak hands. My suspicion is that it did, but you got to watch it for a couple of days to see what's going on and what the fallout is from that day. Another one that just went too far too fast. Well, Axon didn't go too far too fast, but AI sure as hell did. Down 11% today, still hasn't touched the ADMA on this pullback, but has now pulled back 20 plus percent from its highs, and more than that intraday, over 20, almost 25% from yesterday's highs to intraday lows today. After hours, looking at a gap up in Fortinet tomorrow. It's trading at 60 after hours, went out at 54. Good positive reaction, nice earnings number, 76% increase. Maybe this will light a fire under the cybersecurity group. And also after hours end phase, gapping up, went out at 228, trading at 245 now. Leader for a while, but really sold off and acting like a complete laggard over the last 2 months. Let's see if it can rekindle some of its former greatness tomorrow, and that's going to wrap it. As always, like to hear from you. Emails don@revereasset.com or my partner Dan Stewart, dan@revereasset.com. If you're interested in becoming a client, you're just a couple of forms that you can sign electronically. We'll get the ball rolling. These videos will, when you see what we do with the portfolios, will really come to life, and you'll get a deeper understanding of our process. So that's going to wrap it. Closing out. Remember, I can't leave without saying it's not how much you make, it's how much you keep in the market. We kept it last year. We're looking at making it now, with the market being in a much more healthy posture. And with that, I'll wrap up Tuesday, February 7th. This is Don Vandenbord telling it like it is. Just the facts here at Revere. Thanks for listening and have a great day.